Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And remember, if you're interested in any of the services I provide, make sure to check out the links in the description below for both the Patreon and Discord. Right now, we are in a free trial for the swing trade service in the Discord all the way through until the end of this month. So if you want to follow the swing trades in both crypto and stocks, this is the time to do it for free. Once November ends, it goes back behind the paywall, which is $15 a month. If you want tutoring sessions, that's $100 a session. And if you want to enter the day trading room, that's $125 a month. All right, guys, let's hop into the chart. So let's start looking at the dollar. As we can see, we had that nice breakdown from this bullish structure, and now we're starting to trade within this zone between 108 to 106.5. And currently we had a nice little bounce from the bottom of the zone. And if you follow what my doodle showing here, so my thinking is, over a couple of days to maybe a week or so, we're probably going to see the dollar kind of consolidate, sort of going off to the side and then veering to the upside. And whether we get towards the top of the blue zone, the median of this blue zone, so essentially filling out this fair value gap right here. Okay, so this bearish fair value gap that formed over the last three candles, whether we just come up in here, tap in this level and then continue lower, or we're actually going to break up and have a much more significant rise towards the bottom end of this bull structure and then break down. Either way, the end result is we're very likely to continue a breakdown to this ascending trend line, which is pretty much the beginning of this major move that we've had since 2021. And this is, guys, this is a major move to the upside. So the dollar having a significant retracement from there, especially from the top here, especially after losing this bullish structure that was potentially being formed, we want to see a much more significant retracement, so probably all the way back down towards 100, 102, around that zone. So I do think we are going to see more downside as we go into December and really the rest of Q4. So that's going to be very bullish on risk on assets like stocks and crypto. But in the end, we have to keep in mind, on the much higher time frames like the weekly and the monthly, I believe the dollar to be extremely bullish. I do think this is still the decade of the dollar. But over the decade, we will have months and maybe even some years where the dollar does come down, which should give us some, nice buys and a nice, releasing of sell pressure on these risk-on assets. Now, the caveat is with crypto. So if crypto continues to kind of I would say melt. So essentially, we have other big players starting to go under and they have to liquidate their positions. Even if the dollar does get weak, that's going to put enough force on crypto where they can't go up, right? They may eventually go up if the dollar stays weak for a prolonged period of time and the markets can kind of absorb what's been taken, what's been lost, and what's come onto the market. And then could start maybe potentially a nice move to the upside because the dollar's weakened. But if they just, let's just say, for example, something like BlockFi were to go under and they have to liquidate all their positions and all the customers on that platform can't get their money out and they're losing it, then it doesn't really matter what the dollar does. Crypto, a huge supply will just enter the market and sell. So it's like, you got to keep that in mind, so just be very careful. But regarding stocks, they will follow whatever the dollar's doing inversely very closely. And now talking about stocks, let's get into the equity market. Let's take a look at the Dow. So looking at the Dow, I am loving what I'm seeing. So, didn't go up as high as I thought it would. I was looking for maybe a pierce above this high pivot here just to grab the liquidity. But so far, we're showing signs of a consolidation or a bullish retracement. This sort of price action, this sort of structure between these two candles doesn't really imply a major retracement. It does imply a bullish consolidation of some sort. So you do have a long wick doji here, a buy up doji here, and then this candle here from yesterday that just closed, fairly bearish but trading within the wick, so not overly bearish with a lot of momentum. It does imply some sort of consolidation that should veer towards the downside. So similar to what I have drawn here. So watch for that to happen. We may get a retracement back into this level here, which would make total sense, which is a bullish FVG right here. And then if we see, price hold that level and really have a nice higher low formation here, watch for a major continuation to blast through this liquidity zone here above this high pivot and start immediately attacking the highs of this fair value gap that's right here. So let me show you this bearish fair value gap that's formed here all the way back here. So you'll probably see this get challenged towards the top side here. Okay, if we have a nice bullish consolidation here, this will probably get taken out 34,771, and then eventually making it to this high pivot, getting back towards the 35,000 zone. So I'm very bullish on equities going forward, but we should look for some small pullbacks. All right, now looking at S&P next. Let's see how this is looking today. So S&P, trading within this bearish fair value gap, and finding some selling here, right? Not too bad, but again, this does imply that we should see some sideways action. Again, not bearish engulfing, so no real major momentum to the downside, but we could see a minor pushback down towards this level here at 39.18, 39.20. And then if the Dow continues to hold, that fair value gap that I just painted, then watch for that level to hold and then a continuation higher. But overall, I'm loving what I'm seeing. There's a lot of signs of a change of character here. Unless the Federal Reserve would come out and say something extremely hawkish or very, very bearish on the markets, everything should, veer to the upside over the rest of this year. Next is NASDAQ. So fighting at this top end, top trend line from the descending channel here. So the top of the descending channel, this trend line here is being flat, and this is one of the reasons why, if you're in the membership or you're participating in the free trial, I took some shorts on the NASDAQ and the S&P. I'm still holding a couple of shorts here. Again, they're to be built out. I do expect eventually this descending channel to get broken through because of this consolidation I have circled here. There's enough price action here, enough of a bullish structure here that was formed to get enough fuel to attempt to break this level. So we should be able to find enough enough fuel to break through this this descending channel. We may actually go into a bullish consolidation beforehand, which is fine. But if we do start failing off of here and having a significant drop, back into the lows of this fair value gap here that formed this bullish fair value gap right here, so we come back down towards 11,130, I would be very wary of actually seeing this succeed. We should have enough already. Again, we could come back down and make a higher low from these lows down here, but we shouldn't have to. We should have more than enough fuel to break through. And if we break through, just look for these levels here. So this fair value gap right here, or the orange zone. And if we have a really, really weak rise, which will still be nice considering we are in a massive downtrend, but if it's a weaker rise, we'll just get towards the green zone and find some, find a failure there. Either we'll retrace or have a massive slowdown there. And then let's go on to oil. Let's see what oil's doing today. So oil man, I am wishy-washy on oil, aren't I? So if you go back, I actually tell you, go back to the other recaps I've had, the other market recaps, and you'll hear me just go backward and forward on oil. And that pretty much should give you a hint of how indecisive this actual structure is, right? So this is a place where you wouldn't want to be trading oil. You definitely want to be waiting for one of the two paths to happen. So pretty much coming down towards this low here at 75 to around $70. So the low of this much larger structure, this descending structure you're seeing. So on the monthly and weekly, this is a much more bullish structure. So on the daily, it's much bigger. And then you want to look for a potential short opportunity as we come towards the low hundreds, pretty much this ascending trend line, which happens to be the uptrend line on the weekly, right? So this uptrend line that was lost finally will likely get tested again as resistance, and then we should probably see it fail off of it for a little bit. But overall, just like the dollar, I'm very, very bullish on oil, and did come to a couple levels where if it were to continue a new new uptrend to take out these highs, it has hit those levels that I was looking at. So my major level was really 75. It just missed it by just a bit, but it came close enough. And then $85 was also another level, but 75 to $60 was the major level. And since it did come towards the top end of that zone, I think there's more than enough here that if it were to start breaking these highs, it's more than proven itself. Okay, oil is ready to go. If you look at it on a weekly, monthly chart, this is bullish, right? So sorry for all the doodling. Let me see if I can hide some of this. Hold on one second. Let's get rid of that. Let's hide drawings. So this is overall bullish. I mean, you have a massive trend line that was broken. So you have, if you go from this pivot to this pivot here, so you had this pivot prior to the 2015 drop, to then this high pivot here. I actually can't hide, but you're seeing it. So this trend line here that goes back to the all-time high, to this pivot here, to this pivot here. This was broken bullish, and now we have, this high got taken out here. Now we're coming back to, we even tapped the top of the wick right here, and now we're potentially going to start a slowdown or some sort of consolidation that will, likely on the monthly chart veer somewhat bullish, right? Because we're looking at a change of character potentially that's happened here. We had this low, now we have a new higher high from this high, and now we're going to potentially make a higher low. And you got to watch out, man. Oil looks absolutely fabulous on the monthly, and we've had a significant drop so far. So we are definitely getting closer and closer to a potential continuation up. All right, so next, let's take a look at gold and silver. So gold, continue again. Don't be fooled by this candle here that closed. Okay, so this is actually this candle does imply a slowdown. Okay, so it doesn't mean it will. Again, it's all implication, it's all probabilities. There are no guarantees in trading, but this does imply a slowdown. So we should most likely see gold have a pullback here. Now the pullback should lean bullish, as of course we have broken these highs here. So we should be looking for a pullback to come in one form or fashion. So either a bullish consolidation. So that means you can make a bull flag of some sort, or maybe even like a rising pennant. Okay. So something like this, or you just have a bullish retracement to key levels. And for me, those key levels will be fair value gap. So you can come down to these two zones down here, or you can come towards this fair value gap that got made right here. So this bullish FVG right here. So you have a bunch of key levels here where you can see gold come down, make a higher low from these lows down here, and then continue higher. So I'm loving what I'm seeing from gold. I think we just have to be a little bit more patient. But ever since it's broken this trend line finally, I believe that the character has changed for the bullish on the bullish side, and we should see gold getting back towards 1800 and potentially a little bit higher, maybe potentially getting all the way towards 1850, 1840. All right, let's take a quick look at silver. So silver breaking the microphone structure again, because gold is showing a lot of strength, taking out this high pivot and taking out this imbalance here as well. And now, we're going to see, will it have enough fuel to actually come all the way up towards 22, or will it have to come back down and start retracing back towards this level here, or, somewhere around this level here at 20.977. So keep your eye on silver. Again, it's going to really follow gold, but it also has been somewhat lackluster on gold. So just keep in mind that if gold does show extreme strength to the upside, silver may be a bit lacking. But in the end, it will follow to a degree. Again, this has been somewhat of just this year. Silver has been kind of behind gold here and there, but it's starting to show signs of coming back into correlation with gold, much tighter than it has been this year. And the levels where I would look for, I mean, the first level obviously is going to be the top side, the top side of this ascending trend line here, which is the top side of the microphone structure that it seemingly has broke. If, let's say, we were to lose it, then you have a couple places that you want to watch out for. Again, you can come all the way back down towards these high pivots down here, hold the level. You can come to this fair value gap here, or you can come all the way down depending on how long it takes to this ascending trend line, right? So you got to keep that in mind. Like, just because it comes all the way down here doesn't mean it's bearish. As long as it holds these lows that it's made, so these lower lows that are being, here's a low, higher low, and potentially another higher low, and then it makes another higher high, everything's okay. So you just have to keep that in mind. But we do want to see silver being held up anywhere from the 50% to the 38.2. So let's take a quick look at how that looks. So going from this low pivot here to right here to the upside here. I draw that right. There we go. So we want to see essentially this fair value gap get held. 61.8 is okay, but if you want a really strong uptrend, you want the 38.2 to the 50 held, and then the continuation up. All right, so pretty much holding the top side of the fair value gap, and then that should be enough liquidity to see us go up higher. If we don't get that, as long as we hold this ascending trend line, we're probably still looking good for more upside. All right, so now let's go on to Bitcoin, see what's going on over there. So looking at BTC USD index. All right, so After the fallout from FTX, we obviously lost the structure, the double bottom structure, the Adam and Eve structure. We did break bullish until the FTX stuff happened, and then it brought us right back under. And now it looks like we're doing exactly what I thought we would do, trading within these last two candles, right? These so this big down candle and then the nice little pop up. We're trading within that, and we're having a consolidation. And I said, watch out for the consolidation here. It's very likely that this level will hold for some time, and then you'll have a pop up either back towards this descending trend line, or you'll have a move going towards as close to the fair value gap and maybe even trading within it before a major failure. And then this bottom side of this fair value gap, this very large red zone, coincides with nearly the bottom zone of the range, right? So the bottom side of this level here, so where all the wicks are kind of hitting down here, this is the bottom side of this fair value gap. So watch for this level. You could see price fail off of here, of course, but if we do have a weakening dollar and we don't get any major bearish news out of some of these exchanges or DeFi platforms or whatever, then we may actually see a little bit more upside because of a weakening dollar, and that could potentially bring us all the way back towards 20K. But you have to respect we're still in a macro downtrend, and we're still trading within this much larger consolidation that was all the way from June essentially till now. Okay, so we're not out of the woods at all, and we have to have the bias that we're going to see more downside going towards 14K. But again, we're just trying to play the levels. We don't really need to focus too much on where it's going to end up. We just want to make sure we're nimble enough to take advantage of when that happens, right? All right, guys, that's it for the recap. Make sure if you're not in the Discord, be in the Discord. You're missing out. We haven't lost a trade in a long time. Again, I'm not going to promise it's going to be the performance going forward, but just for example, I think we're at over 50 trades in crypto for the year. We've only lost one, which is Terra Luna. And then for stocks, we're probably going towards 80, 90 trades, and we've only lost one on the year. So I don't know why you're not in the Discord and you're not doing the swing trades. I really don't. They're absolute winners. All you have to do is follow the rules. Make sure to follow the rules. Let me quickly show you exactly what I'm talking about. Once you come into the Discord and you want to follow the swing trade, especially during now, which is the like I said, the swing trade free service time. Follow these rules. Come to the Lemon announcements page. Look at if you're going to follow the swing trades during the free trial. Here are my recommendations on how to do so. There's 8 of them. Make sure to follow them. It works. Don't know what else to tell you. And again, if you have any questions, look at rule number 8. Just ask me. And I try my best to answer, whether that's in the Discord or DMs. I won't DM you first. You have to DM me first. And make sure that if you are in the Discord and you're not following the trades, maybe give it a shot, because if you want to, this is your chance to do it for free. And if you do like the service, then past November you can maybe hop on to the service, $15 a month, and you know exactly what you're getting. Okay. All right, everyone, that's it. Make sure to have a good one, and remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.